Welcome to Sectors Up Close. I'm Elena Casas. Our topic today is investing in South Korean equities, and my guest is Stephen Schoenfeld, CEO of MarketVector Indexes. In summary, Korean equities are cheap, pay minimal dividends, and have underperformed. The iShares MSCI Korea ETF, for example, tracks the MSCI's South Korea index. It has a PE ratio of under 9, twice as cheap as comparable S&P 500 companies. The dividend yield is a paltry 1%, and as for performance, it's gained just over 8% this year, but has returned negligible sums to investors over the longer term. South Korea does have strong economic fundamentals in terms of external balance sheet, but domestically the nation has a record low birth rate, an ageing population and household debt of over 100% of GDP. Geopolitics is a factor, including strained relations between the US and China, where many Korean companies operate. Another is the dominance of chaebols, the family-run conglomerates that leave many investors as second-class shareholders. And then there's the size of Samsung, the chaebol that makes up a quarter of the market. So, what should foreign investors consider when approaching Korean equities? Let's ask MarketVector's Stephen Schoenfeld. Stephen, hi, thanks for joining us. Let's start with those shockingly low valuations, a PE ratio of below 9. Is that a buying opportunity or is it a warning sign?
Well, Korean equities peaked over 2 years ago, and their valuations were almost twice as high at the time. So we're definitely at closer to value. Many people talk about a Korea discount. Some of that has to do with geopolitics. Some of that has to do with the cross holdings of the chaebols that you mentioned. But there are changes coming on all of these fronts. One, there are a greater number of activist investors pressuring individual companies and the chaebols to deconcentrate. We've seen this phenomena in Japan over 20 years ago. It's taken a long time. I do believe it's coming to Korea. Also, foreign investors have not been as active over the last few years in Korea, and they do seem to be coming back. The flows have been positive this year.
Well, before we get there, how do you assess the macro situation, Stephen?
So Korea is sort of, as you mentioned, stuck between having huge investments and significant market share in China. And that has been affected by US-China tension. The big exporters to China, such as vehicle manufacturer Hyundai, Samsung, were impacted, but they are revamping their China strategy and they are diversifying further. I'm very bullish on Korea. They are incredibly tech-intensive economy. The government is involved in R&D in a very significant way. Second highest GDP, R&D to GDP ratio in the world after Israel. And companies are investing for the future. For example, Hyundai has just announced major investments to become a dominant top 3 EV producer.
Samsung, like several other big Korean conglomerates, is a structure called a chaebol, which was initially a family-run system, which does squeeze the role of external shareholders, doesn't it? So doesn't that make them less interesting for foreign investors?
We are beginning to see combination of application of governance, better governance coming from within Korea and from Korean institutions, but also foreign activist investors who are picking off pieces of these chaebols and getting them to unleash. There's a lot of locked-in assets in these chaebols, and there's also cross-holdings. So it's very important for investors to invest in what's called a float-adjusted index that separates out these cross-holdings. I think it's inevitable if Korea wants to be the global competitive developed economy that it aspires to be, that they will relax the cross-holdings and the ties within the chaebols. And Korea definitely wants to reach that point.
Given the unique characteristics of the Korean market, then, how would you advise foreign investors start with Korean equities now?
So we've done some very cutting-edge research that looks at the difference between globally focused Korean companies and locally. The globally oriented companies have dramatically outperformed, But what might be surprising to your viewers is even though Samsung is dominant by weight, it has not outperformed. So there's many other globally oriented Korean companies, including chip maker SK Hynix, including LG and all the affiliates of LG, Hyundai and Kia, which export cars. So we would advise a global focus, but with an attenuated weight to Samsung. There are indexes that look at Korea in that way, or if one wants to use an existing ETF, you could supplement it with ADRs to reduce the weight of Samsung.
Well, thanks so much for that insight, Stephen Schoenfeld, CEO of MarketVector Indexes. Well, that's your look at South Korean equities. I'm Elena Casas, and this is Reuters.